going to start with chapter number 1. We're going to start with chapter number 1. Hey, I want everyone's participation here. Yes, I want chapter number 1, which is basics of income tax. Nothing for read in this chapter. The straightforward thing is income tax is a central tax or state tax. Central tax. Income tax is central tax. GST is a concurrent tax. Summa central it seems. GST is a concurrent tax. Income tax is a central tax. The one tax which is state tax is your agriculture income. Income tax comes and says that boss, if you have any agriculture income which is earned from India, then it is exempt from income tax. It is taxable by the state. It is not taxable by me. Yes or no? Yes. Where does this income tax come from? It comes from an article number 265, which comes and says that no tax can be collected or levied except by an authority of law. Except by an authority of law. Why levy, why collected and all we have discussed. Yes. Then they came and said, boss, there are two kinds of taxes. One is direct tax, one is indirect tax. Direct tax is progressive in nature. Indirect tax is regressive in nature. Something which levies on the income of the person. Direct tax. Something which levies on the consumption of a person. Indirect tax. Something where you can shift burden. Indirect tax. Something we cannot shift burden. Indirect tax. Direct tax. Customs duty. Indirect tax. Equalization levy. Padikla final level portion. Final level portion. Yes, this is what you have. Then you have something called as Income Tax Act and Income Tax Laws. Income tax laws is bigger. Income tax laws is bigger. Income tax laws comprises of act, rules, circulars, notifications, case laws. When it comes to acts, you have two kinds of act. One is Income Tax Act 1961, then Finance Act. Which exam for you, ma? 2022. It is Finance Act 2022. If you're writing May 23 and November 23, it is Finance Act 22. Planning for next year, we'll discuss about it later. Okay, your Finance Act 2022 comes into picture. For you, the exam assessment year is assessment year 23-24. 23-24 with the previous year 22-23. This is what the logic is. When it comes to act is passed by first Lok Sabha, then goes to Rajya Sabha, then goes to President for signing or consent. President for signing or consent. He does not give anything beyond that, and then it becomes an Gazette notification becoming an act. Yes, for your exams, you have to read Income Tax Act 1961 along with the Finance Act 2022 for all your amendments. For all your amendments. Then you have something called as circulars and notifications. In simple words, which is binding on the department? Both are binding on the department. Both are binding on the department. But what is binding on assessee? Only circulars are binding on assessee. Nothing else is binding on assessee. Yes, notification is binding on assessee. Circulars are not binding on assessee, but assessee can use the circular provided it is beneficial. Provided it is beneficial. This is what we had when it comes to direct tax components, Income Tax Act, Income Tax Rules, Finance Act, circulars and notifications. When you have something called as rules, rules are subset of act. Rules are subset of act. Rules cannot override your act. Rules will come and tell you how to run an act. How to run an act. The rules are prepared by someone called as CBDT, Central Board of Direct Taxes. Central Board of Direct Taxes. Then you have something called case laws, final level portion, so not relevant. You have some definitions for exam. Let's not worry about it. Let's not worry about it. Never has come in exam. You have one definition called as an assessee. Okay, may come in your last question. May come in your last question. The definition of assessee. We have come and clarified that assessee means any person who's liable to pay tax. Any person who's liable to pay tax or any other sum under the act. Any other sum could mean penalty, interest, fees, late filing fees and all those things. Yes. So any kind of person who is liable to pay tax or any other sum. Any other sum. It also includes those kind of people who are assessed for his income, assessed for his loss, assessed for his refund. Three items: assessed for his income, loss, refund. Now when you're talking about assessing, you're not just talking about his income or his loss or his refund. You're also talking about someone else's income, someone else's loss and someone else's refund if it is accessible by him. If it is accessible by him, which means in the case of clubbing. In the case of clubbing. Then I'm also including those kind of people who are liable as assessee in default. Liable as assessee in default. Assessee in default are those kind of people who are liable for TDS or advanced tax default. TDS or advanced tax default. If you don't have a TDS or advanced tax default, then you will become an assessee in default. In which case you will also become an assessee. In which case you will also become an assessee. With me till here? Yes. If you are an assessee, you will also have another friend called as assessing officer. You'll have another friend called as assessing officer. You both will play a game called as assessment. Will play a game called as assessment where you will come and tell what your income is. He will come and tell some other income. You will go and fight about it. You will go and fight about it. That will happen in an assessment. That will happen in an assessment. Then comes your charging section of the whole Income Tax Act, which comes and says every assessee is liable to pay income tax at the rates in force for the income earned in previous year in the assessment year. In the assessment year. When they use the word previous year, for your exams, previous year is 22-23, assessment year is 23-24. In that assessment year of 23-24, they are coming and saying that, boss, assessment year is always for 12 months, but previous year may or may not be for 12 months. Previous year may or may not be for 12 months because previous year can change in case you are starting your business just now or in case you are born just now. In case you are born just now, previous year can be as small as 1 day also, can be as big as 12 months, can be as big as 12 months. Rahul, can it be more than 12 months? Not possible. Not possible. Assessment year will always be for 12 months. That is how the policy is. Generally, previous year is 22-23, assessment year is 23-24. But in exceptional cases, previous year and assessment year can become same. Can become same. This is a live case study called as Mr. Vijay Mallya, and Nirav Modi. Vijay Mallya and Nirav Modi have come together for F1 racing. For F1 racing, F1 racing has incurred losses. So Mr. Vijay Mallya decided to shut down the F1 racing and decide to leave India. When he decided to leave India, he has to do one thing. He has to shut down his business. For him to shut down his business, he has to sell the assets. So he sold the assets, shut down the business, wanted to leave India, called the friend Doraemon. Doraemon came with a ship, took Vijay Mallya, left India. Yes, what is happening? AOP BOI created in the same year, discontinued in the same year. Individual leaving India with no intention of coming back. Business or profession discontinued in the previous year. Sale, charge, lease or disposal of assets with an intention to avoid taxes. Non-resident coming to India, leaving India. Non-resident shipping coming to India, leaving India. Yes, these are all the cases when you have for previous year or assessment year, previous year or assessment year. Then you have something called as income. Income has been defined in the act as revenue minus allowable expense. It is revenue minus your allowable expense. If you have an allowable expense, you claim the expense. If you do not have an allowable expense, don't claim the allowable expense. You have income in the form of legal income also, illegal income also, capital income also, revenue income also. If it is a revenue income, always taxable. Capital income, if it falls into 224, then it is taxable, which means you need to define what is a capital receipt or a revenue receipt. Revenue receipts are those items which happen normally, capital receipts which happen once in a while. Yes or no? Yes. Then if you are going to generate an income, it is revenue income. If you are using that item for generating income, it is a capital income, which means if you have an asset, if you use the asset, then it is a capital receipt. If you directly generate, it's a revenue receipt. If you are into share business, if you are not into the share business, then it is capital receipt. If you are into share business, then it is revenue receipt. Yes or no? Yes or no? And then they are coming and saying some examples. One example is gift. Gift is capital. Gift is capital. Compensation given for late acquisition of an asset, capital. Yes or no? Termination of employment, capital. Termination of agency, sole agency, capital. Termination of one agency in many agencies, revenue. All these are examples given to you. You have to decide whether it is capital or revenue. Basis then a discussion will happen whether it is taxable or not taxable. Rahul, how to decide taxable? For subsequent chapters. Then they come and use the word total income. In your exams, total income means income from salaries, house property, full form of PGBP. It is profits and gains of business or profession. And or, yes, first and or, profits and gains from business or profession. Then you have capital gains. Final one is garbage called as IFOS. You add all the five, you will get gross total income. In this, you will reduce some items. Does someone remember the golden rules of taxation? Yes, step number 1, identify requirements of the question. Step number 2, identify the assessee and his residential status. Step number 3, determine whether the income is taxable or not. Step number 4, classify the income into 5 heads of income. Step number 5, provide any kind of deductions or exemptions provided in that specific head. Item number 6, at this point of time, you will get your gross total income. Then you have to club someone else's income. Item number 7, provide for any kind of losses or unabsorbed depreciation. Step number 8, you give your chapter 6A deduction or 10AA deduction, you will arrive at your total income. After you arrive at your total income, step number 9 is compute your taxes as per normal rates in force. Then compare with AMT, whichever is higher. Then you will compare with the 115 BAC, whichever is lower. For your attempt, 115 BAC is still an optional regime. It's still an optional regime. Unless and until question comes and clarifies, you have to do both. You have to do both. If question does not clarify anything, you'll have to do both to choose whichever is lower. So it is step 9 or AMT, whichever is higher, compared with step 10, whichever is lower. Whichever is lower, you will get your final tax liability. This final tax liability, you will reduce something called as TDS, TCS, advance tax, self-assessment tax. All these will be your credits to reduce. After you reduce all these, you will now know your tax payable. Add something called as interest. You will arrive at your final tax payable. This final tax payable, pay it off and shut down, and then file your return. File your return with an amendment of the current year called as updated return. With an amendment of the current year called as updated return, where if you want to change your return in favor of department or associate department, in the favor of department, you will find something called as updated return. What is updated return? We'll discuss. This is what your golden rules is. Follow the golden rules. Yes or no? Yes or no? This marks the end of your chapter number 1. All clear? Any doubts? Can we go forward? Yes. With your chapter number 1 getting over, we are going to jump in our golden rules to step number 9. To step number 9, which is our rates of taxes. I want everyone's attention here. You are doing rates of taxes. In your rates of taxes, you have to learn about all rates of taxes, but for exam purpose, only one rates of taxes is important, which is your individual. Rahul, balance, why should I read? Because you have MCQs. You have to read the balance also because you have MCQs, but other than that, you only have to read individuals. You have to read individuals. With me till here? Yes. How do you do this? You have to start from individuals, HUF, AOP, DOI, AJP. 5 people together. You have a individual slab rate of first 2.5 lakhs at the rate of, after 2.5 to 5%, after 5 to 10, 20%, after 10, 30%. This is what your normal rates of taxes are. But yes, if you have to choose the optional regime called as 115 BAC, rates become 0 to 2.5, 0, 2.5 to 5, 5 to 10, 10%, 10 to 12.5, 15, 12.5 to 15. Told you, it is 0 to 2.5, 0, 2.5 to 5, 5 to 7.5, 10, 7.5 to 10, 15, Varla, loose. Try again. It is 0 to first 2.5, it is 0, then 5 lakhs, it is 5, 7.5 lakhs, 10, then 10 lakhs, 15, then 12.5, 20, 15, 25, above 15, 30, appadi, Andacha. Yes, this is what your slab rates are. Keep this in mind. Now, here when you do your slab rates, the income tax is coming and saying that, boss, whenever you do your slab rates, these are your normal rates of taxes for normal rate of incomes. You also have some special rate of incomes. First special rate of income is capital gains. In capital gains, you have 112A taxable at the rate of 10% in excess of 1 lakh. Then 112 taxable at the rate of 20%. Then 111A taxable at the rate of 15%. Any other short-term capital gains comes in the slab rates. Then you have something called as winnings 30%. Then you have something called as unexplained income. It is 60%. It is 60% tax rate plus mandatory 25% of surcharge plus 4% of cess, which becomes 78%. Now, whether you opt for 115 BAC or whether you opt for normal, these rates prevail. You have to give them the priority. The moment you have found out your normal rates of income as per the normal regime, you also have to take 2 more people. One is an individual more than 60 years, then individual more than 80 years. Now, when you talk about individual, please understand it is not just individual, it is resident individual. Resident individual, they are coming and saying that, boss, if you are a resident individual more than 60 years but less than 80 years, you have a slab of 0 to 3 lakhs, 0, 3 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%. After that, it becomes 30%. But if you are a resident individual aged more than 80 years, then you have 0 to 5 lakhs, 0, 5 lakhs to 10 lakhs, 20%. After 10 lakhs, it becomes 30%. This is what the rules are. In this rules, they are coming and saying that, boss, how do you check for 60 and 80? Until the 1st April of the assessment year. until the 1st April of the assessment year. If your birthday falls on the 1st April of the assessment year, then you have completed that age. Then you have completed that age. For your exams, it will be 1st April 1963 and 1943. If it is 1st April 1963, then you are 60 years of age. If you are 1943, then it is 80 years of age, which means you will be eligible for the highest slab. You will be eligible for the higher slabs. Please keep this in mind because this will come as an MCQ. This will come as an MCQ that if your age, if your birthday falls on 1st April 1963, then anything prior to that will become 60 years. If your birthday falls 1943, any prior to that will become 80 years. Any prior to that will become 80 years, which means you will now be eligible for 3 lakhs or 5 lakhs. But please keep this in mind that this is only eligible for resident individuals, not eligible for non-resident individuals, and only eligible if you opt for normal regime, not eligible for 115 BSc. If you are in 115 BSc, whether you are resident or non-resident doesn't matter. Whether you are 60 or 80 or 150 doesn't matter. Everything is 0 to 2.5. Yes, the moment you have identified your slab rates, you then have to ask yourself, are you rich or poor? Are you rich or poor? If you are poor, you will get something called as rebate. Rebate in your income tax starts for a resident individual with an income up to 5 lakhs. Income up to 5 lakhs. If your income falls up to 5 lakhs, then you will be eligible for a rebate of 12,500 or the actual tax, whichever is lower. But the problem is whenever you get a rebate, you don't get rebate on 112A. You don't get rebate on 112A. 112A or LTCG is always taxable. You have to bare minimum pay the tax along with the cess. Yes or no? Yes, we have done some big examples on that. Yamagurka. Keep it in mind. And then if you are not poor, and you are not middle class, you are now rich person. The moment you are a rich person, income tax levies something on you called as surcharge. Now please understand, surcharge is not on a slab rate model. Surcharge is on a threshold model. Which means if your income is anywhere up to 50 lakhs, you will have 0 surcharge. If your income is between 50 lakhs to 1 crore, you will have 10% surcharge. If you have 1 crore to 2 crores, you will have 15% surcharge. Anything beyond 2 crores will become, anything 2 crores to 5 crores will become 25% surcharge. 5 crores commanded will become 37% surcharge. Now please understand, this surcharge is directly levied on the tax itself. Which means you do not have to check for the slabs. Number adhikma acha, automatic surcharge will apply. This surcharge is applicable same under your old regime and your new regime. Alternate or optional, whatever you call it. Yes, all your old regime and 115 BSc, same surcharges, same rebate, no changes in that. No changes in that. With me till here? Yes. Then they came and said, Rahul, if you are going to levy surcharge, surcharge normally the 25 and 37 is called as enhanced surcharge. This enhanced surcharge is not applicable on 4 or 3. 4. It is 4. Comes and says 112A, 112, 111A and dividend income. Yes, 112A, 111A, 112 and dividend income. For your attempt, 112 is an amendment. Keep it in mind. It will definitely come for your MCQs. So they come and say that, boss, if you are under 112A, 111A or 112 or dividend income, you will not levy the surcharge of 25 or 37. You will only maximum levy surcharge of 15. And if you are going to check your surcharge on other incomes, the other income should be checked on a standalone basis. If your income goes beyond 2 crores, what happens? If your income goes beyond 2 crores, split between your other incomes and these 4 incomes. If your other incomes standalone basis goes beyond 2 crores, then 25. If it goes beyond 5 crores, then 37. If it is anything lesser than 2 crores, minimum 15. You cannot go to 10, you cannot go to 5. You cannot go to 10, you cannot go to 0. You have to levy that minimum 15 the moment your income goes beyond 2 crores. We had a chart on this. Yes, ignoring the chart, let's do the illustration and let's see which one is right. Everyone? Yes, let's do the illustration. I'm going to show you the incomes. You're going to tell me the surcharge rates. With me? Yes, let's do the incomes. On the left side is called as specified income. On the right side is called as other income. The total is given to you as 40 lakhs. The amounts are in lakhs. You are going to tell me what is the surcharge for my normal incomes and what is my surcharge for my special incomes. Yes. The first one is coming and saying that your special income is 15, your other income is 25, your total income has become 40. Now, when your income is 40, do you have a surcharge? No. So, therefore, surcharge on special will become 0. Surcharge on others will become 0. Coming to the next one, it comes and says your specified is 15, your other is 75. Total has become 90. When your total has become 90, you are liable for a surcharge of 50 to 1 crore or the 10%. Now, at this point of time, enhanced surcharge has not come into picture, so 10% on both. 10% on both, so therefore it will be 10 on 10. Yes, sir. Yes, sir. Next one, then you have 15 and 160, total becomes 185. Now you are in a slab of 1 crore to 2 crore, surcharge becomes 15. You have still not touched the 25 and 37, so no problem, 15 will remain for both. So therefore it is 15 and 15. Then you have something called as 15 and 395, total has become 410, which means 4 crores and 10 lakhs. Now you have seen that the income has gone beyond 2 crores, which means enhanced surcharge will come into picture. The moment that comes into picture, you have to split between your special and normal. Special will become 15. Special will become 15. Normal will become standalone basis. It is showing 395. Above 2 crores, less than 5 crores, therefore 25. Then they are coming and saying you have special of 15. You have others of 3. Come here. Oh, மேலந்து ஆரம்பிச்சனா சரி okay வராது சரி விட்டுரு you understand ma yes then you have 15 and 565 you have 15 and 565 with 15 and 565 it becomes 580 your income is now 5 crore 80 lakhs when your income becomes 5 crores and 80 lakhs special income will always be 15 so special income is 15 other income standalone basis is showing more than 5 crores therefore 37. Then you have 60 and 30. 60 has become special, others has become 30, total has become 90. This is now come back to the slab of 10%. You are under 1 crore. You are under 1 crore, so it's come to the slab of 10%. Therefore, it is 10 for both. It is 10 for both. Then they're coming and saying 60 and 135. Total has become 185. It is within the slab of 1 crore to 2 crore. Therefore, surcharge is 15. Have you touched the 25? No. Therefore, 15 for both. 15 for both with me. Next, you have 60 plus 350. Total has become 410. 60 is special. 350 is others. Total has become 410. Your now income is more than 2 crores, which means you have an enhanced surcharge, but the enhanced will not apply on special incomes. So 60 will become 15. Others is how much? Others is how much? 25. Why 25, Rahul? Standalone basis, it is showing more than 2 crores and less than 5 crores. Then you have 60 and 520. 60 becoming special, 520 becoming others. When you have 60 and 520, what will happen? You will have to come and say split. You have to come and say split. 60 will become 15%. 520 will become 37%. Then you have 130 and 55. 130 becomes special, 55 becomes others, total becomes 185. With your total becoming 185, you are now again back to 2 crores. You are again back to 2 crores. Surcharge has now become 15. 15 for both. So therefore 15 and 15. Then you have 130 and 280. Notice this carefully. You have 130 and 280. You have 130 of special, 280 for normal. Therefore total is 410. You are now more than 2 crores. Therefore enhanced surcharge should apply but will not apply on special. Special will become 15. Special will become 15. The other will become 25 because it is more than 2 crores. Come to the last one, it comes and says 130 and 450. Now notice your income is 5 crores kamala. Your income is 5 crores kamala, which means special will become 15. Others will now stop at 25. Why is Rahul? Why is others stopping at 25, Rahul? Because standalone basis it is not more than 5 crores. Standalone basis it is not more than 5 crores. Standalone basis it is still standing at 2 crores to 5 crores. Therefore you will become 25. You will become 25. Come to the last three. You tell me the last three. If you know the last three, then your answer is sorted. Then answer is sorted. You have 220 plus 190. Total has become 410. Total has become 410. If your total has become 410, you are now liable for enhanced surcharge, but not applicable on specials. So therefore, specified will become 15. Now others is 190. Others is 190. Standalone basis it is showing less than 2 crores, which means minimum 15. Minimum 15. Can we go forward? Yes. Then they're coming and saying on n column it is 220 and 360. Standalone basis it is 220, which means 15. 360 is 25. Why, Rahul? Because while the overall income may be 5 crores, I cannot pay tax on the other income. So therefore it will become 25. It will become 25. Now look at the last one very carefully. The last one is what will come for exam. The last one is what will come for exam. It comes and says that your special income is 525, your other income is 55. Total has become 580. Now you are in the highest slab. You're in the highest slab, but the special income surcharge is only 15. So left has become 15. Left has become 15. Now right is showing 55. Right is showing 55. Can you come down to 10? No. Why can't you come down to 10, Rahul? Because bare minimum 15 is mandatory. Bare minimum 15 is mandatory, which means 15 will become the number here. 15 will become the number here. Be extremely careful about the last illustration. Most of the people make a mistake here. They end up making it 10 or 0. They end up making it 10 or 0. You will lose marks. You will lose marks. Please be extremely careful on this. Clear, everyone? Any doubts? No? Can we go forward? Yes. These are your slab rates for your individuals, HUF, AOP, BOI, AJP. Yes. While you might notice there is an amendment here in the AOP part which comes and says that if you have an AOP which is a company, therefore you'll have a surcharge rate lesser and all those things. Somewhere here it is. Yes. Ignore all those things. Doesn't matter. Does not come in exam. AOP level discussions and all is there for final level portion. Is there for final level portion, not for inter-level portion, so we don't have to worry about it. Moving on from our individuals, you now have something called as firms. You now have something called as firms. Income tax comes and says that if you are a firm, you will have a mandatory liability tax of 30%. I have no basic exemption limits, which means everything is liable for 30%. Everything is liable for 30%. But if you are a rich firm, then you have a surcharge of 12% coming excess of 1 crore. 1 crore is the revenue or the turnover or the income? It's the total income. It is the total income. If you are not a firm, you are a company. In case of a company, you have to split yourself into domestic and foreign company. Foreign company becomes 40. Domestic becomes 25 or 30. How do you check for 25? It is previous year or previous year. It is previous year. Therefore, for your attempt, it is 22, 23. Previous will become 21, 22. Adhik previous will become 20, 21. So for your attempt, it is 2021. For your attempt, it is 2021. If the 2021 or the turnover becomes 400 crores, then it is 25. If not, it is 30. Please understand, I am looking at turnover, but the tax rate is on income. Okay. So if the turnover is less than 400 crores, the tax on the income will become 25. If the turnover is more than 400 crores, tax on the income will become 30. That is what the rule is. Clear? Yes. And otherwise, if you are a foreign company, then it is 40%. That's all the answer is. That's all the answer is. Now, for the ones who are coming from another academy, you might have also seen some other rates in this company called as 115, BAA, BAB, 15, 22 and all those things. Please ignore for exam purposes. Again, final level portion. Okay, final level portion. You don't have to worry about it. It will not come in exam. It will not come in exam. Assuming you are a rich company. Assuming you are a rich company, you are now liable for surcharges. When it comes to surcharges, income tax comes and says that, boss, check what your income is. If your income is 0 to 1 crore or 1 crore to 10 crore or above 10 crores. If it is 0 to 1 crore, no surcharge. If it is 1 crore to 10 crores, domestic will pay 7, foreign will pay 2. If it is more than 10 crores, so domestic will pay 12, foreign will pay 5. That's what the rule is. That's what the rule is. If you complete all those things, then you have your marginal relief coming into picture. Income tax comes and says that, boss, after you complete your basic, after you complete your rebate, after you complete your surcharge, surcharge may also have certain issues. It may also have certain issues. The issues can be in the form of you coming on an income which is very close to the slab. It is very close to the slab where the surcharge will change, and the surcharge should change. The surcharge should change. If the surcharge is not changing, marginal relief will not come. Marginal relief will not come, which means you should be at an income which is like 1 crore 1 lakh, 51 lakh, 2 crore 2 lakhs, 2 crore 1 lakh, and the Mari scenarios. If you are at somewhere at that limit, what will happen is income tax will come and say that if you try to compute taxes, you will realize that your income is showing lesser than the tax which you have to pay. The income is showing lesser than the tax which you have to pay, in which case income tax comes and says it's not required for you to pay the whole of the tax. It is enough if you pay the income fully to me. If it is enough if you pay the income fully to me, I will surrender off the tax for you. I will surrender off the tax for you. The surrendering of tax is called as marginal relief. It's called as marginal relief. Let's look at an example very simply. It comes and says that you are a person who's having an income of 51 lakhs. I tried to compute my tax. My tax came as 14 lakh 74,000. Now understand, marginal relief will come before cess. So please do not compute your cess. Cess is coming afterwards. Cess is coming afterwards. You're looking at your income. Income is showing 51 lakhs. Tax on that was 14 lakh 74,000. You tried to check the tax of 50 lakhs. You tried to do what? Check the tax of 50 lakhs. You check the tax of 50 lakhs. It came as 13 lakh 10,000 rupees. Now notice the difference. How much is the difference? You're getting 1 lakh 64,000. You're getting an income excess of 1,64,000. But if you notice, you computed tax on 51, you computed tax on 50, which means there was an increase in income of only 1 lakh. I increased my income by 1 lakh, I have to pay tax of 1,64,000. Does it make sense to you? Income tax came and said, boss, if it's not making sense to you, do one thing, you don't have that income itself. You don't have that income itself, you give off the income to me. You give off the income to me. The moment you give off the income to me, the extra tax I will avoid for you. I will avoid for you. So I came and said, okay, sir, let's agree to that. So what happened is I came and told him, I will pay you the whole 1 lakh rupees. Instead of that, you will exempt for me 64,000 rupees. So this 64,000 rupees becomes your marginal relief. So you started with 14,74,000. You are going to remove 64,000 rupees. The number will become 14,10,000. The number will become 14,10,000. Why is it 14,10,000, Rahul? Understand, on 50 lakhs your tax was 13,10,000. I surrendered 1 lakh rupees worth of income, so the tax became 14,10,000. You can do it either ways. If you do from the top also, the number is the same. If you do from the bottom also, the number is same. You will have to take the tax as 14,10,000. On this you will levy cess and then pay the final tax. Pay the final tax. Rahul, this rule applies whether at whichever slab you are. Whether at whichever slab you are you at 50 lakhs, 1 crore, 2 crore, 5 crore, doesn't matter. Everywhere this will apply. You will have to make this check provided your income is very close to the slab. Provided the income is very close to the slab. Rahul, till what number should I check? Don't worry about it. I say I will only give you the known numbers, which means it will be 1,50,000 maximum. Okay, so it will be 2 crore 1 lakh, 2 crore 2 lakhs, maximum that number. Maximum that number. Adukku keela pogadu. Adukku mela pogadu. You don't have to check against that. You don't have to check against that. And off late, I've been noticing marginally if questions only come as an MCQ. Only come as an MCQ question. They do not come as a full question, which means the question will be very apparent. They'll come and say there is a person earned an income of 51 lakh, compute tax. That's all. Now they very clearly come and told you it's 51 lakhs. Obviously, he will not give you 1 mark for you to compute the tax on your calculator. He's giving you that 1 mark rupees for finding out marginal relief. Yes, so be extremely careful on those questions. Don't think that I say stupid to give you some small questions like that. That will not happen. That will not happen. They have some logic behind it. They have some rules behind it. Let's focus on the rules also. Clearly, yes. Yes, this is what your marginal relief is. Please understand this marginal relief is applicable whether you are an individual, HUF, AOP, BOI, AJP, company, firm, every single person, as long as you have the incomes, which means in exam, if they want to test you marginal relief, they don't necessarily have to test you for individuals, they can also test you for others. So please be extremely careful about it. In the exam, Rahul, will they come and tell me to find marginal relief? No, your responsibility. You have to be careful about the fact that the income is very close to the slab. Okay, this whole chapter works on your method. Income tax will only, ICA will only come and tell you the incomes. Your responsibility to find the whole tax. Whether you give rebate, whether you give surcharge, whether you give cess, whether you don't give cess, whether you give marginal relief, whether you do 1128, doesn't matter. Everything is your responsibility. ICA will not give you a single hint against it. You have to take care of the whole thing. Is that clear, everyone? Yes. After you complete your marginal relief comes your special rates of taxes. Before that, we have something called as cess. Cess comes and says that boss, cess has to be levied at the rate of 4%, regardless of what your income is, regardless of who you are, everything will be levied for a cess. Now, cess is applicable on the final income. Cess is levied on, the final tax is levied on the final tax, which means it is levied after basic, after surcharge, after rebate, after marginal relief. Final compute everything, you will get a cess. 4% is on the final number. 4% is on the final number. You do that, the answer will come out perfectly fine. But at any given point of time, please understand there are 2 golden rules in this chapter. Golden rule number 1 comes and says that the total income should always be rounded off to the nearest 10, and total tax should always be rounded off to the nearest 10. Rahul, will I say I come and tell you that? No. That is also your responsibility. Total income should be rounded off. Tax should also be rounded off. You do the round offs, you get marks. You don't round off, half a mark lost for you there itself. Clear, everyone? Yes, this is what your whole chapter looks like. In this last part of the chapter, we had something called as special rates of income tax. We already discussed the special rates of income tax, but there are some rules against it. So let's discuss the rules. The rules basically in the special rates of income tax are coming and saying that, boss, whenever you have the special rates of income tax, there are certain rules. You have to mandatory pay this tax. It's not optional. You will not get any expense against these taxes because these are final taxes on the revenue itself, except if you are in capital gains, because capital gains has their own mechanism. You follow the mechanism. After that, no more taxes. No more expenses. You have to follow the same rule. At any point of time, these special rate of incomes will not be eligible for anything called as a chapter 6A, will not be eligible for anything called as chapter 6A and 10AA, or will not be eligible for losses also. But please understand, losses are eligible on capital gains also. But if you have a loss from capital gains, then it is not eligible to set off against any other incomes. We'll discuss that when we go to set off chapter, but this is what the rules are. You cannot set off any losses against your other incomes like casuals or unexplained. They are not eligible. But any kind of income is eligible for rebate. Except for one income called as 112A. Except for 112A, every other income is eligible for rebate. At the same time, they're coming and saying, boss, surcharge is the same for everything except for unexplained income where it is mandatory 25. Please understand, there could be a possibility that your income will also have a surcharge even if it is less than 50 lakhs. What are the scenarios? If your question has an unexplained income. If you have an unexplained income, regardless of what your income is, you will have a mandatory surcharge of 25%. No rules against it. There is mandatory there. But still, even if it is unexplained income, you can claim a rebate. And the most important concept from exam perspective is your set off of basic exemption limit. What? Set off of basic exemption limit. Income tax comes and says that when you have special rates of incomes, normally speaking, they are not your basic exemption limits. But if you do have capital gains, what do you have? Capital gains. And I find you as a resident person. If I find you as a resident person and you have capital gains, I give you the benefit that if you are not able to utilize your basic exemption limit, you can utilize your basic exemption limit by using your capital gains. If you do that, then your tax will automatically come down. Rahul, in what sequence should I do it? In the sequence of whichever is beneficial. I'm not going to tell you what is the beneficial part. You already know from the sums which we did. Yes or no? Yes. From the sums which we have done, you automatically know what is beneficial. Normally speaking, unless you have a rebate, normally speaking, the best beneficial is to set off the capital gains of 20%, then short term of 15%, then come to 10%. That's what the priority of set off is. Please understand, this set off can only be done with your capital gains and can only be done if you are a resident individual. Cannot be done if you have special other incomes like casual or earnings. Those will mandatorily be liable for taxation. You cannot set off your basic exemption limits against it. Yes or yes? Everyone following me here? Yes. This marks the end of your chapter number 2. Any doubts here? Everyone is clear?